I'm Rob from NextView Venturess. I'm a very bad public speaker, so I need some notes. So apologize in advance. So we're a seed stage focus fund here in Boston. I'm going to start the pitch a little differently. Who here loves to drink beer? What are some of the favorite beers that you guys like? Just shout them out. What was that? All right,
Pabst Blue Ribbon.
Pabst Blue Ribbon. It's very, very retro. I guess it's New York, old school. So we like to drink a lot of beer, me and my partners, and we found that the beers that we like to drink tend to be craft brews, right? Microbrews, Brooklyn Brewery, and so forth. What does this have to do with venture? So we see the venture capital market evolving very much like the beer industry. There was a time when venture was a cottage industry with a bunch of different players. But over time, there's been a bifurcation of the market where you have a few players that are very, very big. They compete on scope and scale, like the Anheuser-Busch's of the world. In the venture market, you can think of that as the Andreessen Horowitzes or the Sequoias, right? These are the guys who invest every sector, every stage, every geography. As a result, on the other end of the market, you see an emergence of much more focused groups. You see the microbrewers, right? And for us in venture, we see a similar rise of funds that are focused on a few things. And so our positioning as a firm is to try to be one of the elite microbrewers in the venture capital business. Now, what makes a microbrewery an attractive option? And I think it comes down to one of two things. The first is focus, and the second is obsession with customers. And so let me talk about those two things. So the first is focus. As a firm, we do seed stage investing in internet and mobile businesses. Almost everything we do is in the Boston and New York markets. That is all we do. We don't do Series A's as an initial investment. We don't do B's. We don't do things in random markets or in other industries that we don't focus on. We do one thing, and that's what we try to do very well. We also build a relatively focused portfolio. We don't. A lot of seed investors will do dozens of investments a year. We do only a very small handful. On a per partner basis, we will do something like 3 investments per year, which means that every single investment that we make is important and meaningful to our fund. We also lead pretty much every investment that we make, or at least we try to play a lead role in each one. So there are things that you never hear from us. You never hear us say things like, when you find a lead, give us a call and we'll chip in. You'll never hear us externally, internally say, well, why don't we put a little bit of money into this company and see what happens? That's not what we do. We are very focused. This is what we do for a living. Every investment matters a lot. So that's focus. And I think it's actually benefited quite well. We're a relatively new fund. We've been around for 3 years. We've made 30 investments. 75% of the seeds that we make that go out to raise Series A successfully do so from some of the top VCs in the market. So it's very early, but we feel pretty good about how things are going. The second thing is customer obsession. So when my partners and I started this firm, we were all operators and entrepreneurs in the past, and we said, if we were trying to raise money for a new company, what kinds of things would we look for in an investor? And let's try to build a firm that satisfies those things for our customers, which is the entrepreneurs, which is all you guys. And so, it comes down to a couple things. One is we wanted we'd want to raise money from groups who live and breathe the sectors that we focus that our companies are involved with. And so, as a team, we've all been operators and entrepreneurs at large-scale, high-growth internet companies like eBay, PayPal, LinkedIn, About.com, and we've been investors 100% focused on the internet and mobile sectors at great funds like Spark Capital and Venrock. So we're highly focused. We're very hands-on. We've all done online customer acquisition, biz dev, and product at the earliest stages of both small and large-scale companies. So that's sort of the human component. The second thing that we would have looked for is a high degree of alignment in incentives between the investors and the founders. And that is one of the reasons why we have this focused strategy where all we do is lead, all we do is seed stage investing, and we try to design an investment model where in almost all cases, the best interest on the entrepreneur is the same as our best interest, and that's something we try to live by. And the third thing we really wanted to go for was a high degree of empathy with founders. And if you look at our ethos, we have this ethos section on our website. Some people might think it's corny. I think it's highly important. These are our operating principles. One of the things that we talk about, which we borrowed from a great firm called Greylock, is this concept of an invited guest. It's our goal to be the invited guest at the entrepreneur's table, not the other way around, which means that we have a highly constructive, honest, direct relationship with founders who we believe are the primary people building their business, and we try to maintain that from our first meeting all the way to hopefully the exit of these companies. Many of the entrepreneurs we work with will say that that among all their investors, they have the most honest and direct relationship with us relative to anyone else, and that's something we find we're very proud of. So
Right.
that's us.
Excellent. Thank you.